If you're interested in learning about stock market trading as a beginner, it's essential to understand some fundamental concepts, strategies, and tips. Here's a comprehensive guide to help you get started. Understanding the stock market. The stock market is a platform where buyers and sellers trade shares of publicly listed companies. When you buy a stock, you're purchasing a small ownership stake in that company. The main goal is to buy stocks at a lower price and sell them at a higher price to make a profit. Key stock market terms: stock or share. A unit of ownership in a company. Stock exchange, a marketplace where stocks are traded, for instance, the NYSE or NASDAQ. Broker, a person or platform that facilitates the buying and selling of stocks. Bull market, a market trend characterized by rising stock prices. Bear market, a market trend characterized by declining stock prices. Dividend, a portion of a company's earnings distributed to shareholders. Market cap, the total value of all a company's shares calculated as stock price times total shares. Steps to start trading in the stock market. Here are some steps to follow if you're new to stock trading. Step 1. Set clear financial goals. Determine your objectives like saving for retirement or growing your wealth. Establish a budget for how much you're willing to invest. Step 2. Choose a reliable broker. Select an online broker that offers a user-friendly platform, low fees, and good customer support. Examples include TD, Ameritrade, eTrade, and Robinhood. Create a brokerage account, which is necessary for buying and selling stocks. Step 3. Understand the different types of stocks. Blue chip stocks are shares of well-established, financially stable companies like Apple or Microsoft. Growth stocks are shares of companies expected to grow faster than the overall market, such as Tesla. Dividend stocks are shares of companies that pay regular dividends to investors, like Coca-Cola. Penny stocks are low-price stocks of small companies with higher risk. Step 4. Learn stock market analysis. First, let's talk about fundamental analysis. This involves evaluating a company's financial health, its earnings, revenue, and industry position. Key metrics to consider include the price-to-earnings ratio, earnings per share, and dividend yield. Next, we have technical analysis. This method focuses on analyzing stock price charts and indicators to predict future price movements. Key tools in technical analysis are moving averages, the relative strength index, and candlestick patterns. Step 5. Develop a trading strategy. There are several approaches you can take. Day trading involves buying and selling stocks within the same day to capitalize on short-term price fluctuations. Swing trading means holding stocks for several days or weeks to profit from short to medium-term trends. Long-term investing is about holding stocks for years, focusing on gradual growth and dividends. Another approach is dollar-cost averaging, where you invest a fixed amount regularly, regardless of stock prices, to reduce the impact of market volatility. Step 6. Start small and diversify. Begin with a small investment to gain experience. It's also crucial to diversify your portfolio by investing in different sectors such as technology, healthcare, and energy. All right, let's dive into some tips for beginners. First up, do your research. Always research companies before buying their stocks. It's really important. Next, keep your emotions in check. Don't let fear or greed drive your decisions. Stay updated by following financial news, earnings reports, and market trends. Also, make use of stop-loss orders, which means setting a predetermined price to sell a stock to minimize losses. And hey, practice with paper trading. Use virtual trading platforms to practice without risking real money. Finally, have realistic expectations. Avoid looking for overnight success. Instead, focus on long-term growth. Common mistakes to avoid. Overtrading. Buying and selling stocks too frequently can lead to high fees and potential losses. Chasing hot tips. Relying on stock tips from others without proper research can be risky. Investing money you can't afford to lose. Only invest funds you can afford to risk. Neglecting risk management. Always have a plan for managing losses. Ignoring diversification. Putting all your money into one stock or sector increases risk. Useful resources for learning. Books: A Beginner's Guide to the Stock Market by Matthew Crater, The Intelligent Investor by Benjamin Graham, and One Up on Wall Street by Peter Lynch. Websites and apps: Investopedia for educational articles, Yahoo Finance for financial news, and TradingView for technical analysis tools. YouTube channels: Graham Stephan, Meet Kevin, and The Plain Bagel. Getting started with your first trade. Step 1. Log in to your brokerage account. Step 2. Search for the stock you're interested in using its ticker symbol, for example, APL for Apple. Step 3. Choose the type of order, whether it's a market order, limit order, or another type. Step 4. Enter the number of shares you want to buy. Step 5. Review your order and confirm the purchase. The stock market can be a great way to grow your wealth over time, but it requires knowledge, patience, and discipline. As a beginner, focus on continuous learning, practice with small investments, and gradually build your confidence. Always remember that the stock market involves risks, so invest wisely. Feel free to ask if you have any specific questions or need further clarification on stock trading topics.